Hello friends, welcome back to Mancy's Wisdom. Today we're going to discuss a concept that can completely change the way you look at charts. A concept so powerful that once you understand it, you'll stop asking one of the most dangerous questions in trading. The question is, what do I think will happen next? And you'll replace it with a far more profitable question. What is the market revealing right now? Today's lesson is called the pivotal point. A pivotal point is not just a price level, it is a truth-telling zone. It is the place where the market is forced to reveal its hand, the place where buyers and sellers can no longer hide, the place where opinions stop and reality begins. Let's understand this with a simple story. Imagine a student who keeps telling everyone, "I think I topped the class. I am sure I scored highest. My paper went very well. Maybe not." Those are merely opinions. Then comes result day. Suddenly all the guessing ends. Now the truth is visible. The result day becomes the pivotal point. Before the result, opinions; after the result, facts. The stock market works exactly the same way. Every day traders argue, bullish, bearish, target 1000, target 500, but eventually the market reaches a level where the truth must reveal itself. That level is the pivotal point. Now let's look at a real trading example. Suppose a stock has repeatedly failed near ROM 100 for 3 times it touched ROM 100, 3 times it fell. Every trader is watching. Every institution is watching. Every algorithm is watching. Now ROM 100 becomes important. ROM 100 becomes the pivotal point. Now something interesting happens. One day the stock approaches ROM 100 again, and suddenly, volume explodes. Price surges through ROM 100. It closes at ROM 105. The market has spoken. The market is saying, buyers have won. Notice something important. You didn't need to predict. You simply waited for the market to tell you. Now let's imagine the opposite. The stock reaches ROM 100. Sellers appear aggressively. Price collapses to ROM 95. Again, the market has spoken. But this time the message is different. The market is saying sellers still control this area. Weakness has been revealed. Again, no prediction was required, only observation. This is why professionals love pivotal points, because pivotal points remove guessing. Now let's move to something every Indian trader understands. Nifty. Imagine Nifty is approaching a major all-time high. News channels become excited. Experts start making forecasts. Social media becomes noisy. Everyone wants to know, will Nifty break out? What happens when Nifty reaches that level? Think about the difference. One question demands prediction. The other demands observation. If Nifty reaches resistance and shows strong volume, broad participation, powerful closing strength, then the market is revealing bullishness. If Nifty reaches resistance and shows heavy selling, weak close, failed breakout, then the market is revealing weakness. The pivotal point becomes the judge, and the market delivers the verdict. Let's use cricket. India needs 6 runs from 1 ball. The entire stadium is nervous. Millions of people are watching. Before the ball is bowled, everyone has opinions. We'll win. We'll lose. We'll lose. It's impossible. It's easy. Then the ball is delivered. 1 moment later, reality is known. That final ball was the pivotal point. The market has similar moments every single week. Support levels, resistance levels, breakouts, breakdowns. These are all moments where the market must reveal the truth. Now let's discuss one of the biggest reasons beginners lose money. Most beginners buy before the pivotal point. Suppose resistance is ROW 100. The stock is trading at ROW 98. A beginner says, "I know it will break." Not evidence? Now watch what the professional does. The professional says, "Show me." He waits. The stock breaks ROW 100, volume increases. The close remains strong. Now he enters. Yes, he paid a slightly higher price, but he bought a much higher probability. And in trading, probability matters far more than getting the lowest price. Now let's explore 3 powerful types of pivotal points. The first is the breakout pivotal point. This is the most common. Imagine a stock trapped below ROW 100 for months. Every rally fails. Then one day, price explodes through ROW 100, volume surges. The market reveals strength. ROW 100 was the pivotal point. The second is the pullback pivotal point. After a breakout, many stocks return to test the breakout level. Suppose the stock breaks ROW 100, moves to ROW 150, then falls back to ROW 100. Now everyone watches. What happens next? If ROW 100 holds, strength is confirmed. If ROW 100 breaks, the breakout may have failed. Again, the market reveals truth. The third type is the climax pivotal point. This is one of the most fascinating. Imagine a stock doubles in 3 months. Television channels are discussing it. Friends are recommending it. WhatsApp groups are celebrating it. Everyone wants to buy. Volume becomes enormous. Then suddenly, the stock stops rising. Something changes. The excitement remains, but the price stops responding. This can become a climax pivotal point. Sometimes it marks the end of a trend. Not always, but often enough that professionals pay close attention. Now I want to share a secret. Most beginners ask, where can I make money? Professionals ask, where will I quickly know if I am wrong? That single question changes everything. Because great trading is not about being right. Great trading is about managing risk. Imagine buying a stock at 102 after it breaks 100. You decide, if price falls below 198, I am wrong. Now your risk is clearly defined. The market has given you a clear line in the sand. That clarity is priceless. Let's make this practical. Every weekend, open your charts. Take a notebook. Mark 5 things: previous highs, previous lows, major support, major resistance, recent breakout levels. These areas become potential pivotal points. Then during the week, don't chase random price movements. Wait for price to approach these important zones. And when it does, become a detective. Ask questions. Is volume increasing? Is the close strong? Is participation broad? Is momentum improving? Let the market reveal the answer. Don't force your own answer onto the market. Before every trade, ask yourself 5 questions. Question 1. Where is the pivotal point? Question 2. What must happen there? Question 3. What confirms strength? Question 4. What proves me wrong? Question 5. Is the reward worth the risk? If you cannot answer all 5 questions, you probably should not take the trade, because uncertainty is expensive, and clarity is profitable. Now let's close today's lesson with something powerful. Most people think successful traders predict the future. That is one of the biggest myths in finance. The best traders are not fortune tellers. They are observers. They don't force the market to agree with them. They patiently wait for the market to reveal itself. A pivotal point is where opinions end and facts begin. Amateurs guess what will happen. Professionals wait for evidence. Amateurs anticipate. Professionals observe. Amateurs argue with the market. Professionals listen to the market. So the next time you look at a chart, don't ask, what do I think? Because the market's opinion is the only opinion that matters. Thank you for joining me on today's episode of Mancy's Wisdom. In our next chapter, we'll explore a fascinating concept called the operator's mirror, where the biggest challenge in trading is not the market, but the person staring back at you in the mirror. Until then, wait for the market to reveal the truth, respect pivotal points, and let evidence guide every decision you make.